Let's talk market fundamentals, and to do that, Deven Choksey, Managing Director of Choksey Securities, is also ready. Deven, good morning and thank you for joining us. Deven, courtesy global cues, Indian markets managed to stabilize yesterday. But if I look at the market behavior is still slightly non-supportive. Flows are not there, and the intensity of yesterday's comeback was not powerful.
Yeah, good morning, Nikunj. Well, certainly I think what you said is right. I think yesterday when you look at the data, you find I think that there is a sharp drop into the volumes both in cash market as well as derivative markets. And to a greater extent, I think this particular volume drop I think is attributed to a larger amount of volatility that we are seeing into your market. On one day, I think you have a sharp fall into the market, call it Friday. Then you have again, I think, coming back on Monday, market, I think, rising up very sharp. So to a greater extent, I think, during the course of the week, I think, when you have such a large volatility, I think the normal investors will drop and they will not participate into the market. That explains the volume. And as a result of which, I think, you are probably finding that, I think, market is languishing at this point of time. I would call it, I think it's a corrective phase. Good part in this market is that I think there are people who are participating into the market who are long-term investors, both from FI side as well as from the local institution side. We are finding, I think, buy orders coming into select stocks, of course, but at the same time, I think they are buying for long-term. So it gives the confidence that if the merits are there in the individual stock, I think it's an opportunity to buy into this market, and it gets validated with various results which we have seen, including one of Tata Motors. So to a greater extent, I would think that we'll stay in the range. We'll stay in the range of 7750 on the upside, and the downside will stay put at around 7500, 7550 levels. And going forward, I think if 7750 levels are crossed under, I think, some good amount of buying taking place in the market, then probably we can think of, I think, going into the higher territory. But otherwise, I think we'll consolidate in this area at this point of time as it looks like.
What did you make of Tata Motors earnings, and are you also looking to re-rate or revise your target in the stock?
On one side, I think on a year-over-year basis, I think when you look at these particular numbers, I think they look, I think, far more superior, far more smarter. But at the same time, I think on a quarterly basis, when the numbers are seen, I think there is a growth seen, but not, I think, as much as I think one has seen for the year-over-year period. So from that perspective, I find that I think the Tata Motor numbers are smart. At the same time, I think it is suggesting that the company has entered into the league of 22,000, 24,000 crores profit on an annualized basis. Should that be the situation, I think the stock rating will probably go up. Currently, I think the stock has been quoting in the range of around 8-9 forward Ps. According to me, I think it is easy to expect that I think the stock P would get re-rated to around 10 plus. And that's where I think we believe that the stock price could possibly jump up to somewhere around 550, 575 levels going forward in the next 12 months' time.
Deven, are you not worried about the current debt situation of Tata Motors, the fact that they are planning to expand more, which means that they would be either diluting more or they would be raising more money via the debt route?
Well, yes, I think one could possibly argue for, I think, this particular subject, but at the same time, I think what I'm also looking at is that the cash generation has been, I think, extremely strong for this company. They have been from various geographies, I think they have been collecting good amount of cash, I think, from the sale proceeds that they are doing. So from that perspective, I'm not totally, I think, concerned about this aspect, but yes, at the back of the mind, I think one would keep the capex program that the company is having. I also believe that I think the kind of league in which they have entered into, probably, I think in the different geographies, you might see a larger share of the market they would be commanding going forward, given the new model launches that they are talking about, and given some of the smart technologies that they are building into the engine, particularly in the engine and transmission space. So to a greater extent, I believe that I think they would hold an edge over others, I think, in the global marketplace, in the JLR portfolio particularly. So I think to an extent, yes, I would keep that worry on one side, but at the same time, I think would also look at the strong cash flows, I think, which are happening. They have given a very strong commentary yesterday, I think, from even China front also. They believe that I think the company could possibly, I think, generate higher amount of business even from China. And consider India portfolio, I think, which has started, probably, I think the loss-making proposition is getting over, and I think now we are going to enter into better times as far as commercial vehicle segment is concerned and the new launches in the domestic market. So to an extent, I would believe that yes, I think one could keep that particular issue on the debt side, but at the same time, keep an eye on the cash generation, which is far more stronger.
The real estate pact, Deven, are you taking a new look at the sector given the REIT norms? Also the fact that there's a lot of focus coming in from the government as far as pushing low-cost housing is concerned. So there is a deliberate attempt to kind of build opportunities for the sector.
Well, yes, I think there are two advantages through this REIT proposition, as I would call it. Of course, I think the companies would find the new money coming into the system so that at least they would be in a position to lease out their space. That is one obvious outcome that one could argue for. But more than that, I think with this new money coming in, I think many of the real estate companies, I believe, would go better, I think, as far as the discipline and the management is concerned. In this particular area, I think what one has seen is that I think majority of the times, I think many of the companies have remained indisciplined, particularly when it comes to, I think, taking up new projects and I think building the cash flow position along with. Now, given the proposition of you having new investors into this business through REITs, I think they would probably have a better control on the management of these companies. And that's where I believe that I think there could be an opportunity going forward into many of the real estate companies. Not totally sure as to where I would put my money at this point of time, but fact remains that I think we still remain very comfortable with the business model of Godrej Properties and Oberoi Realties kind of companies vis-a-vis some of the commercial real estate companies like DLF. So to an extent, I think would keep our focus on with these two companies at this point of time.
Deven, the other standout mover in the month of August from the large cap space is clearly Infosys. What explains the underlying strength in Infosys? Change of guard or bargain hunting?
Well, I think on one side you could possibly say that the change of guard has actually, I think, started giving more amount of confidence to the individual investors. Also, you can say that I think many of the investors who remain underweight into this particular stock because of the concerning issues, they have probably, I think, started allocating more money with the hope that the new person on the job could possibly start taking corrective action faster, and particularly because he's coming from Silicon Valley, I think the areas which are growing faster are the cloud computing and the mobile apps. So to an extent, I think that is where one could possibly argue that Infosys kind of company could possibly enter into a space which they have not entered up till now, which is, I think, inorganic growth, wherein in acquisition of business, I think, could be the new norm that could come up with the new person on the job. So to an extent, I think we find that many of the funds have started increasing the exposure into the market, into the Infosys. Of course, I think the benefit is that on a forward earning estimate basis, the stock is still quoting at 14-15 times price earning ratio. So it's not too expensive compared to their peers. That's also, I think, a rationale which is going along with. I believe that Infosys stock probably would trade in the range of 3,300 to 3,700, 3,800 levels, at least for next 2 to 3 months. And after a few quarters results, I think you might see re-rating into the Infosys.
Deven, what is the deal with Mahindra and Mahindra Finance? The numbers have not been strong. Again, for the second quarter in a row, NPA problems are huge. Yet the stock has found a lot of buyers at lower level.
No, sorry, Nikunj, I think don't track this company, so won't be able to give any specific comment on it.
Okay, let's talk about HDFC Limited. That stock also made a decent comeback yesterday. Do you think going forward now HDFC Limited has the potential to be the leader of this rally? There is a strong buzz that eventually HDFC Limited and HDFC Bank will be merged. So maybe that merger buzz could keep the stock warm.
Yes, I think that's a strong point, I think, which one could possibly argue for, and that's where I think the stock price probably will show a lot of resilience at the lower levels. We are not arguing for any fundamental aspects at this point of time, except that the fact that in the coming times when the economy starts improving, as we heard the SBI's commentary, they have been confident about higher amount of credit growth, and so is the case with most of the private sector banks. They have been, I think, talking about higher amount of credit growth. I do believe that I think with the credit growth improving in the economy, I think both the income from the interest as well as I think from the fee income portfolio of most of the private sector banks would probably stand improved. Of course, HDFC Bank's quotes at this point of time, I think, at a premium valuation, and that's where I think probably the headroom for an upside would be relatively less, unless I think there is a correction in the market and one has taken advantage of the correction by buying at a lower levels. So my strategy here out would be that I think this is a strong company. It holds the promise of, I think, of getting merged into HDFC. There would be financial strength, I think, which would be coming up because of that in the new environment. But at the same time, I would say that I think it makes sense to buy at lower levels in the corrective downside. What one saw, I think, earlier, I think in the earlier period in this month or the last month, maybe at the end of it, I think some correction is definitely giving some entry to the new investors. I would be buyer at the lower levels in this company.
Deven, what's the sense on Coal India? There's of course all that talk about institutional interest coming back. They're looking at revising prices higher. Do you have a buy on this one?
Yes, Tanvir, I think we do have a buy on recommendation on this company. Importantly, what one has observed in last few quarters of performance in Coal India, at least around 27 to 30% of the total production is commanding the better realization because of the higher amount of yield that they are fetching. The call it, I think, effect of the call washer is, I think, which is coming up into some of these grades. So to an extent, I think if one has to look at this particular company going forward, if the realization turns out to be better for Coal India, then in such situation, I think yield would stand improved. That is the first point. Yes, I think the bigger challenge would be about the debottlenecking the production and probably, I think, improving the production capabilities of this company. It's not likely to happen in hurry. Yet I think we believe that even if 4.5% to 5% kind of a production growth comes into this company, with a better yield, the profit performance of the company should be better. Not necessarily true for every quarter, but at the same time, I think on a yearly basis, if one wants to look at it, I think this could be the true assumption that the company's profit performance would be, I think, better going forward. The company remains, I think, strong as far as the potential and the possibilities are concerned. We don't track immediately, I think, for the quarter-on-quarter basis numbers for this company because I think there are real improvements which are still pending. So to a greater extent, I think would hold this stock in the portfolio for long-term investment without getting too much bothered about the quarterly performance in this company.
Right. Deven, closing comments from you. Give me your best mid-cap idea.
Yeah, Nikunj, I think there are few stocks which we like, and I think one of the stock in which I think we would like to consider our buy in the current situation would be UPL. I think UPL is one company which we like more because I think the amount of growth that the company has been planning and the implementing probably, I think, is keeping us, I think, active on this particular counter. We like this company from that perspective. At the same time, I think there are many products which are coming up, new products which are coming up on the agrochemical side, which are likely to be, I think, for the first time, I think, having this particular pattern and could register smarter growth, not only in India, but I think also in the other parts of the world where they are exporting. So from that perspective too, I think we believe that I think this company could be on a volume-led growth and expansion going forward. It's once again, I think, a stock which one will have to hold it in the portfolio for long term. I'm not suggesting that this company is going to give you immediate return in shorter period of time. Of course, I think at a lower level in the corrective downside, if one has bought it, probably 10-15% kind of an upside, I think, in the recovery market would be definitely visible and possible. But hold with this company, hold this